Thank you, Mr. Chairman. Thank you, Mr. Chairman. Mr. Chairman, did I understand you to say that the reconciliation bill is the most extraordinary legislation you've ever seen? Did I hear that correctly?
Welcome back, Patriots, to the Constitution Corner, your go-to channel for all things American, constitutional, and conservative. If you love protecting our freedoms and hearing honest commentary, please like and subscribe right now. Let's grow this base.
There may have been some lost in translation there.
I was a little late. Tell me what tell me what the bond market's telling you.
Bond market's fine now, functioning well. It's pricing, it's reacting to economic news. There's adequate liquidity. Rates have come down pretty significantly from where they were a couple months ago. So I think I think inflation expectations have come down a bit from April, and in general, the bond market is functioning well.
Okay. Explain to me why we have seen in the last few months a weakness in the dollar.
That's a great question. And of course, the Treasury Department is responsible for the role of the dollar. So I don't know. I think I would go back to the thought that markets have been digesting an unusually challenging set of circumstances, and have reacted the way they've reacted. The dollar's kind of stabilized now. In fact, it's moved back up here in the last couple of weeks a bit. And there are plenty of people who are still writing that the dollar is still overvalued. We don't have a view on that, of course, but I wouldn't really have an opinion on exactly why it is where it is.
Well, clearly there's a lot of geopolitical risk right now, which would lead one to conclude, all things being equal, that people would be flocking to the dollar and it would be stronger.
Well, you have seen some of that here in the last few days. But again, I don't really have an official view I'd like to share on that. I think there are possible explanations, multiple possible explanations. Again, one of which is that some people still feel the dollar is highly valued.
Yeah.
But we'll see.
I want to talk for a few minutes about tariffs and inflation. What does history tell us about tariffs and its impact on inflation or deflation?
So the thing is, we've been through a long period in which tariffs were going down. Remember, since World War II, really, it's been a process of lowering tariffs globally. So there just isn't a lot of modern learning on that. I think people look at the incidence of tariffs during the president's first term, but those were like 1/6 the size of what's people are estimating now. And they do find some effects on inflation. But remember, in 2019, when those tariffs were put into place, the economy was slowing. We actually cut rates 3 times. Inflation was running at 1.5%. So it was a very different time. This is different. I think one of the reasons why it's so challenging is that there really isn't a modern precedent. Yeah. And I think we have to be humble about our estimates. And we are very open to the possibility that transmission through into inflation will be less than we think, or maybe more than we think, which is why we're in a position of wanting to take our time and make a smart decision as we see how this unfolds.
Well, obviously, the size of the tariffs makes a difference, does it not?
It does.
And we don't know yet the size of the tariffs.
We don't. And we don't have a view on any of the merits at all. That's not our job. Our job is inflation, as you know, and maximum employment.
Will it also matter, let's assume that there is upward price pressure, would it matter how much businesses decide to pass on versus just eat? Does that make sense?
Yes, that matters. That is what matters. The question is, who's going to pay for the tariffs? Originally, it's the importer, but it gets passed along through the distribution chain to some extent to the consumer. The ultimate question of it is how much of it does show up in inflation. And honestly, it's very hard to predict that in advance. So we're watching to see, what shows up in measured inflation.
If the president's trade negotiators pursue reciprocity, which I define as both sides reducing, in a quid pro quo, reducing tariffs and trade barriers as much as possible. Ideally, in a perfect world, we would end up with two sides with zero tariffs and zero trade barriers. Would that be inflationary?
No, not at all.
That would cause the economy to roar, wouldn't it?
I think it would be.
Yeah. Okay. Thank you, Mr. Chairman. I appreciate your endorsement, Mr. Chairman, of the reconciliation bill.
Today we're reacting to a jaw-dropping exchange in Congress where a legislator asks the chair if reconciliation is the most extraordinary legislation ever seen, and dives into questions about bond markets, the dollar, and tariffs. This whole exchange reaffirms what we've been saying. Washington's focused on playing with numbers, not defending American sovereignty or lower taxes. Let's start with the claim that the bond market is fine, has adequate liquidity. What does that mean? In plain English, Democrats want you to believe their massive spending isn't an issue. But patriots know better. Uncontrolled government borrowing threatens the strength of our currency, drives inflation, and shackles future generations. Next, the question on the weakness in the dollar. They casually dismiss it, attributing it to market digestion and geopolitical risk. But think about it, why don't they call out the root cause? Years of reckless spending, skyrocketing national debt, and fiat currency abuse by the federal. As conservatives we say, when you abuse the printing press you weaken the dollar, plain and simple. Then they pivot to tariffs and inflation. Notice the tone, we don't know the size of tariffs, and we'll be humble in our estimates. That's bureaucratic speak for, we're clueless so we'll do more harm by guesswork. But we patriots see things differently. If other countries cheat us, undercutting tariffs and dumping products, we need strong reciprocal tariffs. Bringing production home means better jobs, stronger industry, and real economic sovereignty. Yes, we want trade, but fair trade based on strength, not weakness. The remark, in a perfect world, zero tariffs would cause the economy to roar, sounds nice on paper. But that's utopia. In reality, countries like China manipulate currency, steal intellectual property, and flood our markets. Removing tariffs without enforcement exposes American workers and manufacturers to existential threats. Patriot readers, here's the core. Our nation needs leaders who stand firm, not humble, not uninformed. We need bold policies that defend the dollar, secure fair trade, and stop Washington's debt binge. We must stop settling for polite uncertainty and demand American-first solutions. Let me know in the comments, are you tired of this same old Washington nonsense? Want us to push leaders to stop the borrowing, defend the dollar, and back real tariff policies? Hit like, subscribe, and ring that bell so we can keep fighting for the Constitution and American sovereignty. See you next time. Always stay informed, always stay patriotic. We are the Constitution Corner, where Americans' root guides its future. Until next time, stand strong, speak truth, and may God bless the United States of America.